Tell me about earlier when you said that bank runs are a good thing. Can you explain that statement?
Yes.
Because most people, like the prevailing, conventional wisdom on it would be that a bank run's a bad thing.
Look, it's unfortunate if a bank gets into trouble, but if it is in danger of failing, a run can be a very useful device. First of all, the threat of a run is very useful for disciplining bankers and making them avoid taking excessive risks to begin with. But if a bank has taken those risks and is in danger of failing, a run makes sure it closes very promptly before it becomes insolvent. And then it can always pay off its depositors in full without any bailouts. Whereas under our present system, more often than not, depositors, of course, have no incentive to run, and regulators tend to allow the banks to stay open even after they've become insolvent. In the end, the insurance funds take a hit, and if they take too large a hit, taxpayers are on the hook.
But how would investors be, or depositors be protected without FDIC insurance? Because the bank isn't going to be holding within its reserves enough money to meet all its obligations.
The idea is, and this is how it happened historically, this isn't hypothetical, depositors in the absence of insurance have to shop around and be careful what banks they do business with in the first place. But in those days when there wasn't insurance, it wasn't difficult to determine which banks were relatively safe. You could look at their capital ratios. You could even find out what assets banks held. You could certainly find out how liquid their reserves were. There were banks in New York here that were famous for holding extremely high reserves and high capital ratios. So if you could afford to do business with them, that was how you kept out of trouble.
But do you think that the majority of consumers have that financial savvy to be able to...
They didn't take much. I'll tell you something. The reason consumers now don't put any effort into it is because they're insured. But if they put as much effort into finding a bank account in an uninsured environment as they put into picking their cell phones, they would find it not that hard to locate a fairly safe and reliable bank.
You talked about the poison tree of regulation. Would you advocate any regulation whatsoever, or do you think it should be completely laissez-faire?
Well, I'm not against regulation, but I think markets and competition do a very good job regulating if they're allowed to. Nobody wants to have a system that's chaotic. But if you have a banking system where the threat of failure, first of all, is present, and banks can't be expected to be saved by the government if they manage their affairs badly, that is a regulatory rule that by itself can be very, very successful in promoting safe banking.
Well, let me clarify, and this will be my last point because I know you need to go. What should the government role in regulating financial markets be? It
should be to honor contracts, to arrange for expeditious bankruptcy procedures, and to throw swindlers in jail.
Undercurrent under the surface makes the mainstream get so nervous. It's time for purpose, for news to serve us, not with propaganda they use to hurt us.